Hey guys, welcome back. Listen, I was doing some reading and I have to share a perspective that I just came across because I don't think many people truly understand what's happening with the SpaceX IPO. Guys, it's not about rockets anymore. It's a liquidity trap and a Nasdaq 100 squeeze all rolled into one. And while the media continues to focus on the massive $2 trillion valuation number, the real story with this IPO is the Nasdaq fast entry rule that just came into effect, that just changed, that could force index funds to start buying millions of shares just 15 days after the IPO launches. This will create a dangerous tug of war between forced institutional buyers and early insiders waiting for the December lockup period to end. If you're a retail investor, you need to understand this rule change. You need to understand the situation that could happen of this Nasdaq squeeze before you place a single bid on this IPO. Guys, if you haven't done it already, hit like, hit subscribe to the channel. Let's dive in and talk about the SpaceX IPO and why it could potentially be a trap for us retail investors. First, let's talk about the rule change that just went in effect on May 1st, because it'll have a huge implication for us as retail investors and a big impact on this IPO. Let me pull that up and we'll walk through it together. But you can see on the screen the headline, the Nasdaq's new fast entry rule and what it means for investors. New rules could leave passive investors holding the bag in massive IPOs. Guys, if I scroll down here, you can see that the exchange operator rolled out a new fast entry rule that will allow it to speed up the process of adding such mega companies, massive companies to its flagship Nasdaq 100 index. Ordinarily, it can take up to a year for a mega cap stock to be included in the index. But under the new rule that went into effect May 1st, new public mega caps would be eligible for inclusion after just 15 trading days and with only 5 days of prior market notice. This is a huge change and will have major implications for us as retail investors. We have to make sure we understand, because in the past, the NASDAQ, it could take a minimum of 3 months up to a year. As I mentioned, they have slashed that waiting period now down to 15 trading days. And why this matters is because it will require forced buying. ETFs like Invesco QQQ, who manages over $430 billion, they will be legally required to buy SpaceX shares, regardless of the price or the fundamentals. And because price discovery with IPOs usually takes months to figure out, forcing these funds to buy just after 15 trading days could catapult the price during the initial hype phase. Critics are already calling this a major wealth transfer from passive index investors to fast money hedge funds who buy on day one and flip to ETFs 15 trading days later. The valuation for the company will be a huge part. We know they're pushing for a $2 trillion valuation. I can pull that up and just show you a couple articles that show that. First one, you can see here is SpaceX eyes a $2 trillion IPO. And the second one from Motley Fool, which mentions right here in the point that's highlighted that SpaceX may be targeting a $2 trillion valuation overall. This evaluation is all based on their recent stock merger with XAI. It was at that time they valued the combined entry at 1.25 trillion before this IPO push. Last year, SpaceX generated roughly 8 billion in profit on 16 billion in revenue. A 2 trillion evaluation, if that's the case, any investor would be paying a massive premium for the future of space-based AI infrastructure and Starlink's global dominance. In a rare move, though, I will say Elon is reportedly pushing to reserve 30% of the IPO for retail investors. You can clearly see on the screen here, let me pull that down, that SpaceX IPO may allocate 30% to retail investors. And he's also running it through both Bank of America and Morgan Stanley, as outlined in the article. It is a rare move, I mentioned, not only to allocate that much to retail investors, it's triple the standard allocation, but how he handpicked Bank of America and Morgan Stanley through the E-Trade so he can start to focus or at least give this opportunity to smaller retail investors. And he's picking those two to handle the distribution. And also, according to leaked confidential SEC filings, this IPO isn't just a capital raise, it's a performance trigger for Musk as well. His compensation apparently is heavily tied to technical milestones, including a permanent human presence on Mars. There are specific share grants tied to launching orbital data centers. effectively putting 100 terawatts of compute into orbit. You know, this is a memory channel. This is music to all of our ears. This is why the memory sector is so vital to this story, and why another reason why I wanted to share it on the channel, because you cannot have space-based AI without massive radiation hardware storage that is offered by the Fab 4, the memory titans that we follow on this channel. But guys, here's the roadmap. Let me go through the roadmap, and then I'll give you my take, my prediction overall. But let me first pull up the roadmap you can see here, and I'll pull up to the front of the story. You can just the timeline overall. Many of these timelines are milestones have already been hit. April 1st, the confidentiality filing. April 21st to the 23rd was Analyst Day. And then we get into the estimated registration, or the S1 filing, somewhere between the dates of May 15th and 22nd, so later this month. And then we'll move to the week of June 8th as the start of the roadshow, marking the largest IPO in stock market history. It's projected to begin the week of June 8th, which is why the S1 must be filed no later than May 22nd. We have an investor day on June 11th, where SpaceX plans to host approximately 1,500 retail investors following a roadshow launch on June 11th. And then we get into the estimated IPO date of June 18th through the 30th, some point in there. And then the lockup period ends for insiders, in late December, we'll say. So that's the timeline for anyone that's interested in investing. But let me give you my personal opinion, my take. Again, this is my personal opinion. I'm not a financial advisor. I'm just a gentleman with 30 years experience investing. So make sure you do your own research. Make sure it fits into your risk tolerance or matches whatever the goals are for your portfolio. But for me, the bottom line is this, and I want to be very clear with all of my viewers on this channel. I believe the SpaceX IPO is a structural trap for retail investors who don't understand the fast entry rule. The Wall Street whales are going to front run the Nasdaq 100 inclusion. They know the QQQ, or the index fund, must buy the stock at day 15 regardless of the price. My prediction is I think we will see a vertical inclusion pump between day 1 and day 15, followed by a massive liquidity dump the moment the index funds finish their buying. So my advice would be threefold to you. One is to avoid day 1 fear of missing out, and avoid the FOMO. Do not market order this at the open. Historic history shows that a 30% retail allocation often leads to massive day 1 volatility as weak hands get shaken out. My second piece is the 15-day exit rule has to be on your calendars. Mark it on the calendars, because if you get an allocation at the IPO price, your exit window isn't years. It's at the peak of that 15-day Nasdaq inclusion. Take the initial investment off the table when the forced buying from the index funds hits its peak. And then finally, mark your calendars for that late December 2026, because this is when the lockup period ends. This is the 180-day lockup expiration. The market will be flooded with insider shares. If you aren't out by then, if you happen to buy at the IPO and you're not out by late December or mid-December, you risk being the exit liquidity for SpaceX employees and early venture capital. Now, here's the hard truth for me as well. SpaceX is a generational company, but a great company can be a terrible stock if you buy the hype and ignore the mechanics. Don't be the retail trader that buys at the top of the fast entry squeeze. Play the mechanics, watch the 15-day clock, mark your calendar for the late December lockout period expiration, and let the index fund put money in your pocket if you happen to get in. Otherwise, I advise just staying away. That's what I plan to do. I don't plan to invest at all in this IPO. Guys, I hope it helped for you. I hope this video made you think about it a little differently. If so, drop a comment below. I hope you're having a great night. See you soon.